Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be starting off the video because it is Christmas by saying Merry Christmas and Happy Holidays to every single one of my viewers and subscribers out there. Today we're going to be talking about investing in my 401k or Roth 401k. I go back and forth trying to decide what is best for me because I'm trying to look at 2018 with the new tax reform that took place. I want to know where exactly I sit with my long-term capital gains tax rates, because if I fall into the now 12% tax bracket, or is it going to be the 22% tax bracket and below, I need to know what tax bracket I need to fall in as a married individual with me and my wife in order for our long-term capital gains and our dividends to not get taxed in 2018. So if I could contribute $32,000 into my 401k, which would knock us down into a lower tax bracket, then that would be my goal. So I am still up in the air, reading a bit more on the new tax reform, on the new tax term, long-term capital gains. So right now this is up in the air for the final vote. Right now I have gone with my Roth 401k, but I may adjust it after I read into the 2018 tax reform changes a little bit more. So this isn't in any order as far as investing goes, what I'm screening for. So I want to get a great deal when I'm purchasing a mutual fund or ETF inside my 401k. So I look at the following, and these aren't in a specific order. I look at the annual operating expenses. These are costs of the investment company it takes to operate over the course of a year. I look at the expense ratio. This is basically the annual fee based on the value of assets over the year. So if you have $1,000 of assets inside your 401k, it would get an expense ratio of say 0.82, which would be $8.20 over the course of the year, if taken out every quarter. So one, it may not seem like much at first, but once you hit $10,000, that's $80 you're getting taken out for the year, or $20 per quarter. So that could be money that's working for you instead of against you. I also want to take how long has that fund or ETF, how long has it been around? I want to know, I want to have some history with it. Has it gone through some downtime back in 2008? Has it gone through 2000, the dip that took, I would like an ETF or fund that has been time tested. I also want to look at the 5-10 year average, and I wanted to keep up with the S&P 500, at least have a 7 to 10% capital gain, as well as have some sort of a dividend yield. And then I also want to know what stocks, what bonds, what exactly does it hold. I am primarily a stock market investor with stocks. I do not own any ETFs at this moment. I do own 2 REITs, but an example of the average mutual fund expense ratio is 0.74 in 2016, which means for every $1,000 it would cost you $740 in fees, and an average ETF expense is 0.24 in 2016, which means for every $1,000 it would cost you $4.40 in annual fees. So the very first year, if you make $50,000, you contribute $5,000 or 5%, that's $2,500. If your company matches you 5%, that's $5,000 in your very first year. If you get hit by the mutual fund at 0.74, 740 by 5 is $35, a little over $35. So we'll say 38 by 4. I can't do the math right now. It's a little around $8. So that's $8 every quarter that's being taken out of your 401k in order to get paid for expense ratios. That's gonna not be complete because you're gonna be hit with a fee every quarter based on what your value of your 401k is. So now inside my 401k, I have different funds available, fund options. So inside, when I first opened it up, my default option was the BlackRock LifePath Index 2050 portfolio. Now I'm going to be customizing and taking a look at what other options it had. Now it had money market accounts, and these are the rates for them. So the current return for the year is 1.5, 5-year annual 1.79, 10-year annual 2.7 or 2.56. So these are terrible. So I just scratched this completely out. I already have a bunch of funds anyway that, my bonds actually. I have quite a bit of bonds and they all have a higher yield than that. Now I have these target date funds, so I was automatically stuck into the 2050 one, which is right here. So year to date it's 17.2, which wasn't bad at the time when I was looking into the stock. I believe I wrote this article up maybe like a week or two ago. And what's this here? The 5-year is 11.22. It has not been through a recession, so this is marked as not applicable. The since inception, the average is 8.79. The operating expense is 0.23, and the expense ratio is 0.12. So these are all pretty high operating expenses and expense ratios. I had my friend that works with me. I told him, dude, look at your 401k and customize it, because he had initially told me, whatever they're charging, I'm sure it's worth it in the end. And I told him that, I talked to him a little bit about the expense ratios and how the money gets drained out of your account. And I gave him the example of the last video I made where my mistake was with my 401k was not customizing it in the past. They also have asset allocation funds, so depending on your lifestyle, whether you're aggressive, whether you're moderate, conservative, and such, or looking for income. Now, these, my year to date for income investing is much higher than what this year to date would be. My current year to date, starting in July, I'm over 10% now in my portfolio, and I've generated over 4% yield. So I would always choose to individually invest in stocks over choosing some sort of a mutual fund or an ETF. But in this case, inside the 401k, you can't specifically target stocks. So I did look at the expense ratios in here. These do not have any expense ratios, but they do have some operating expenses, which you don't see. It's just kind of taken out of the fund in the background, just the cost to operate the specific fund for the year. So these are still, reasonably high, but they're not as high as these mutual funds here, or these target date funds here in the past. Now I went in the bonds. I already have quite a bit of bonds, and these offer very low yields in comparison to what the market can offer you. So I wanted to be a bit more aggressive with my 401k. So I looked down here into the large cap stocks, the mid cap stocks, and the international stocks. Now international stocks, I can always choose to invest in something like that inside my IRA or my Roth IRA, individual, or my non-retirement account. So I took a look at large cap stocks and mid cap stocks, and after taking a look at, actually go down here, I skipped the guaranteed account and money market accounts, target date accounts, asset allocation funds, and bonds, and then I had double or triple operating expense. All of the all the following prior to the small cap, large cap, and international caps basically had triple the operating expense and expense ratios as the ones at the bottom. And then when I actually fell down here to the bottom, I decided to take a look at the large cap stocks and the mid cap stocks, and they all had their little ticker symbols, which are right here: BEMPX, VIIX, VIVIX, and VIGIX. So I then used the website to analyze these specific funds, which I have here. It's not really very noticeable, but as you go over to this website here, let me go ahead and I'll copy. It's a really great website for measuring ETFs, so I will paste it, select it, and paste this one, or copy and paste it over here, and select it, and do the same with the next one. And this kind of gives you a nice idea of what they look like side by side. So I then use this review tool to kind of take a look at their performance, their risk, and assess assets, and I took a deeper dive in to see what stocks they actually held in the overall rating. So taking a look over here, we can see their currency, they're all US dollar. We can see their 3-year return are right about average, besides their Vanguard Growth Index Fund. We can see their 3-year standard deviation, a little bit higher there. We can see their Morningstar rating. So this one's rated at 5 stars, whereas these are 4, 4, and 3. And then we see their minimum initial investment, but this is for the actual fund itself. This doesn't pertain to you guys. The operating expense, the net expense ratio here, the net assets in billions. So this is each of them. So the largest one would be the Vanguard Institutional Index, which is VIIX, And then as we go down here into performance, it kind of shows them, shows each of them over the last 5 years. We can take a look at this over the last year. We can see that the orange one, which is the Vanguard Growth Index Fund, is actually beating out all of them at this current time. If we look at the year to date, let's see, back over here, it was for the Vanguard Growth. So that would be the Vanguard Growth. This one here. We can see year to date, it greatly outweighs any of these other ones by 23.77. So I took a look at that. Here we can see the trailing total returns for the year, for the 1 month, 3 year, 1 year. So we can see that the index growth one here for the 1 year is 28.27. This is because it includes dividends that are reinvested into and contribute to the actual fund itself. We can see over the last 3 years. We can see over the last 5 years. So right around 5 years, it begins to average out, and they all are right around the average looking style. We can see this by risk and return. We can see that the S&P 500, the mid cap is one of the, let's see, the mid cap is at the higher risk. So here we have the lower risk, which is on the bottom. So as it moves to the right, it's more risk. As it moves to the left, it's less risk. As it goes up, it's higher return. As it goes down, it's less return. And we can see that this blue one here, the Vanguard, the Vanguard Extended Market Index, is both a higher return and of the lower risk. And then if we go down, we could take a look at the investment. This doesn't actually go into the stocks themselves. It kind of just goes into the ratings and such. And then this one, I don't think this one went into the stocks either. It just kind of talked a little bit about the assets. If you actually want to take a look at what's inside each specific one, that would be on the website. If you clicked on the where I was actually looking at my 401k, if I clicked into it, I could see the actual fund itself and what stocks were held. One of them had Tesla. I believe it was the growth one had Tesla. That's why Tesla's was so much out in the lead, because Tesla has been doing leap and bounds in this last year. Whereas this one, I believe, was Apple. And I believe for my final review, I decided to go with VIIX was the winner. It did rate a bit lower on the year to date and the 10-year than the Vanguard Growth Index Fund, but I believe that it does have slightly lower fees, and it does offer a higher yield, which will allow VIIX over the long term to have less money cut out, earn more money with dividends, and allow itself to compound a bit faster over time. So that was ultimately my pick. So the Vanguard Institutional Index, which was this one right here, it had a fee of only 0.02, so 20 cents for every 1,000. It also had a higher, since inception, it had a higher return. For the 10-year, it was a little bit below the 10-year, but I'm okay with that. It doesn't have as much ups and downs. You can see that this one's quite a bit behind in year to date, nearly 7%. So we will see how it trades out in the next 5-10 years as I'm investing in my 401k. So that is it for this video. I will be releasing this article if you guys are interested in kind of taking a look at what I screened for, what my funds available were. If you guys have your own 401ks that you have similar funds to mine, I would have you take a look at the large cap stocks, the mid cap stocks. If you don't even have if you haven't customized your 401k, I would definitely advise you guys to go out there and customize your 401k. Take a look at what you have offering to you guys. Again, I am not a financial advisor or tax professional. The information provided is my opinion, and you should always consult with a professional financial advisor and tax professional prior to investing in anything. But yeah, that is it for this video. If you guys have any questions or comments on any of the funds, 401k, Roth 401k, and such, go ahead and leave that in the comments. And that is it for this video. Merry Christmas, everyone, and have a great day. Bye bye.